All right, so this is part 2 of the last video. In part 1, I showed you idealized line diagrams. The next step is to go to real-world charts and with the amazing power of hindsight, show you what a superstar trader I am. I'm saying that kind of tongue-in-cheek. I'm saying that because one of my biggest pet peeves with a lot of these YouTube and Instagram accounts focused on trading is that they'll walk you through theoretical things. On real charts, mind you, but it's theory. There's no proof that they've actually recommended that trade, done the analysis beforehand, or taken the trade themselves, whatever the case might be. So there are 3 paths here, or 3 stops along the journey to understanding my trading strategy. Part 1 is we live in the idealized line diagram world. Part 2 is I show you how easy this is on historical hindsight charts. And I laugh as I'm saying that because, again, this is where most people stop. Step number 3 on this journey is to show you trades that I've actually called out or taken myself or recommended to others, and to walk you through post-mortem, walk you through my thought process when I was looking at the trade. That part is crucially important because you get to see all the mistakes that I make. All right? I make mistakes constantly when I'm trading. Now, when I say I make mistakes, what I'm really saying is that I'm just reading the market wrong in real time. All right? That comes with the territory. Being a good trader is not being perfect and being flawless and never making a mistake. A big part of being a good trader is recognizing what to do when first of all, recognizing when you've made a mistake, and step 2, how to pivot and end up profitable despite having made those mistakes. Okay? It's like that Mike Tyson quote, it's like everyone's got a plan until they get punched in the face. Well, that certainly applies to trading. So I'm just going to walk you through how we can apply my method, or the philosophy behind the method that I just explained in part 1 on some historical E-mini charts, which I have been tracking in real time. But again, there's a difference between tracking a market and analyzing it in real time and converting that into profitable trades. So real quick, I'm just going to walk you through what I see here, starting from these red arrows. So we have a wave 1 up, we have a steep wave 2 down, this is wave 3, triangle 4, A, B, C, D, E, 1, 2, 3, 4, 5 for wave 5 to complete wave 1 up, right? Now you can see we have a pretty unorthodox and drawn out correction, which is our wave 2, but nonetheless it's in 3 waves, all right? So here, my entry criteria are 1, I need to see a rally in 5 waves off this wave 2 low, and we need to take out a prior swing point, which would be right here. Well, we got that. Okay, I apologize. I'm going to have to use the replay tool here. Okay, so I've got 5 waves up here. I can't remember exactly how I counted this in real time, but it would be something like this: 1, 2, 3, 4, and 5, and 2. All right. We're on a 15-minute chart. If I drop down to a 1-minute or 5-minute chart, the subwaves could potentially be more clear, but that's not the point. The point is that I want to show you how to apply this trading philosophy in real-life markets. So this is not a good wave 2. I don't like this wave 2. At this point, I wouldn't even be thinking of trading because, yes, it's in 3 waves, but wave 2s usually end up being a steeper retracement. They usually retrace to the 61.8%. Sure, we almost got to 50. So this would be an atypical wave 2. Now, I can't wait for textbook wave patterns all the time, but I will not trade if I don't like the look of something. So I'm waiting still. I'm waiting still because in my mind, when I was tracking this real time, I thought this was A, this would be B for an expanded flat, and then we'll get a steeper wave C. So let's just see what happened. Well, we got the high that I was expecting. And at this point, I am considering the possibility that this is wave 2 all done. Why? Because this price action is sideways. It's not impulsive in nature whatsoever. Okay? And you can see we got another shallow wave 2. I still wouldn't be trading though because I don't like the price action. So I'm still waiting now for a microwave, and at this point it's appropriate for me to drop down to a lower time frame. All right. So here I can see I've got a series of 1-2s unfolding. 1, 2, 1, 2. We're in the heart of a third wave, but I don't really see anything I like. Nothing that would suggest to me that it's worth risking capital at this time. All right, now I'm getting interested though. All right, why? Because I can count this as an impulse. 1, 2, and then for wave 3, we have 1, 2, 3, triangle 4, wave 5, wave 4, wave 5. Okay, so I'm excited now because on a 5-minute chart, I can count this impulse cleanly, and this looks corrective. Let's pull up my momentum indicators, all right? Okay, so I can see that the MACD starting to go flat and stabilize, and I can see that my RSI, I would really like this to get oversold, so I'm just keeping an eye on these indicators. Keeping an eye on them, all right? Now this is interesting. We got overbought very quickly, all right? In the context of this, being this overbought is not a good sign. It tells me that this is probably wave A, this is probably wave B, and we need another leg lower to complete wave C. Okay, that's pretty much exactly what we got. Now I'm waiting for RSI to get either oversold or give me some kind of clear momentum signature. Oops, I went a little bit too far. Okay, now here's where it gets interesting, all right? We're taking out this swing point and the market's starting to move higher now, all right? Remember my last video? That would be something that is a potentially acceptable entry criteria. In this case, and I know I said my preference is to wait for something like this and then a clear 3-wave decline, but now I have enough price confirmation. Remember, we're making higher highs and higher lows. Here's a high, here's a higher low, here's a higher high, here's a higher low, here's a higher high, here's a higher low, here's a higher high. So at this point, I have confirmation. The market, I say confirmation not in the sense that I 100% know for sure, but I have more information that the market is bullish. So this breach of this level could absolutely be used as a trading point, as an entry point to risk some capital. And we could definitely be using this as a stop. Okay, now it doesn't really matter to me how this plays out because I already have my labels here, so I know we're going there. But the point I'm trying to make here is the philosophy, the thought process. The outcome of any one individual trade is not important. What is important is the thought process and whether that thought process is something that you can repeat over and over and over again. All right, that is important. Now this obviously looks like a 3rd wave, even without the label on it. And we can see here, this is classical 4th wave behavior. Expanded flat. Look at that. We got a zigzag for wave 2. Elliott's guidelines of alternation tell us that we can expect, if wave 2 is a zigzag, wave 4 will usually take the shape of an expanded flat or a triangle. Right? So that's exactly what we get here. Now from a trading perspective, again, what can we see? So if this is wave A down, this is wave B up, and this is wave C down, well, what can we see here? Well, it looks like to me that wave C in this case took the shape of a weird, messed up diagonal formation. Again, not textbook, but if you're waiting for the textbook, for the market to always give you textbook wave patterns, you might be waiting a while in some cases. All right, so the low that I'm keeping my eye on, or sorry, the swing point I'm keeping my eye on here would be this level. If we take that out, well, then we can no longer say that we're in a bearish market. And we can see here as price unfolds, I'd be pretty nervous at this point because this is a corrective price action. And this is corrective price action, but eventually we stabilize. We start making new highs. This is obviously a corrective pattern, and you can see that price unfolds nicely. So identifying these key levels is a big part of being able to utilize this trading strategy effectively. Okay, if we go to something else like, let's see, what are some stock trades lately? Tesla. Okay, Tesla's had some big moves over the last several days. Okay, so we can see here, obviously an impulse wave, okay? A, B, C, X, A, B, C, double zigzag. All right, so what would I like to see ideally here? Well, this is a clear swing point. I'd like to get above this in 5 waves, But notice what happened here. Again, if you're waiting for the textbook, you're never, you're going to be waiting a while before you take a trade. This is where I will use the power of assumption. Okay, and Robert can attest to this. I will use the term assumed wave one a lot of the times. Why? Because sometimes wave one will not count very nicely at a micro scale. 15-minute chart, 5-minute chart, what have you. In this case, however, this is reasonable, I would say. So we've got wave one up, a very shallow wave two, wave three, wave four, and then a tiny little spike for wave five. And then we have A, B, C for wave A, B, C. Okay, so this is some kind of complex correction. Sorry, I rushed through that. If I had to do this properly, I would say, yep, this looks like also some kind of double zigzag, W, X, Y. I don't want to waste too much time trying to figure out this messy portion. But the point is, this is an impulsive move up, right? A corrective move would be kind of shallow and meandering like this. This is shooting straight up, all right? So shooting straight up in and of itself is not enough bullish evidence. The key thing to look for here is, do we have a clear corrective decline? And I would say, yes, we absolutely do. So now what we would do is zoom into this corrective decline and look for key turning points. Look for swing points to take out. That would give us good initial evidence. So that's a swing point. If you wanted to be more cautious, that's a swing point. That's a swing point, right? So we can use as many swing points as we want, and you can add a little bit to each trade. That's a strategy I like to use, because if each swing point we take out is more information the market is telling us that our analysis is broadly correct. But there's nothing wrong with waiting for the big level at $944 to be taken out. You could totally do that. So once we wait for this level to get taken out, now we can wait for a three-wave corrective decline. Well, when I say three waves, I would count a triangle in there as well. I'm just saying that because this looks somewhat triangular in nature. A, B, C, D, and E. So long, I went a little too fast there. I was going to say, from the triangle's point of view, this is A, B, C, D, and E. And so long as we don't take out the low of wave C, this triangle can be correct. My favorite entry technique for triangles is going long on a break of wave D. And then the market just gapped up and didn't look back. Okay, so I hope that gives you an indication of how we can use, and remember, triangles only appear in fourth wave, so this means this is a fifth wave. So if you missed out on the Tesla bull run, which I'll be the first person to hold up my hand and say, I've not bought Tesla calls, I've not traded this move. Why? Because I'm waiting for 1, 2, 3, and I'm going to wait for the wave 4, and then I'm going to trade for wave 5. Right? So that triangle we were looking at is a fourth wave within a third wave. Right? So this is the third wave triangle. This is the triangle in the larger third wave. So that's wave 4 of wave 3, and we're now in wave 5 of wave 3. After which we're going to get a larger, more time-consuming correction would be my hunch. All right. So that's the plan for Tesla. And that was kind of cool because I kind of walked away from looking at this chart, and I haven't looked at Tesla in a few days, but I came away with an idea to trade the next move based on those philosophies that I just showed you. We're going to get a short-term top in Tesla, followed by a larger degree wave 4 that will give us a tradable opportunity to the upside. The question now is just what kind of shape will that corrective pattern develop into? Is it going to be a combination, a triangle, a flat, a zigzag, double 3, triple 3? We don't know. We have to wait. And that's a big key lesson here. This is a different trading philosophy, but an equally important one nonetheless. Patience pays. It's okay to not know. I don't know what the market is doing a lot of the time when we're correcting because I just don't have enough information yet. The market will reveal itself and its true intentions with due time.